Hello, everyone. Welcome to the market opening bell on Monday, July 14th. Your 10-minute guide to the stock market. The market is optimistic about the meeting between Chinese and US foreign ministers last Friday, which is expected to pave the way for a leaders' summit. The Hang Seng Index rose by up to 477 points, reaching a 2.5-week high of 24,506 points. However, as US stock futures extended losses, Hong Kong stocks significantly paired gains, closing up only 111 points or 0.5% at 24,139 points. The H-share index rose 0.2% to 8,688 points, and the Hang Seng Tech Index gained 0.6% to 5,248 points. The total market turnover was 323.9 billion Hong Kong dollars, the highest since April 10th, when turnover was 395.5 billion. Southbound trading turnover reached 181.9 billion Hong Kong dollars, with southbound net inflows of 1.744 billion Hong Kong dollars. For the week, the Hang Seng and A-share indexes both rose 0.9%, while the tech index underperformed, up only 0.6%. Mainland Chinese markets performed strongly. The Shanghai Composite Index hit a high of 3,555 points last Friday, closing at 3,510 points, up 1.1% for the week. The Shenzhen Component Index peaked at 10,757 points, closing at 10,696 points, up 1.8% for the week. The renminbi US dollar central parity rate was set at 7.1475, up 35 pips from the previous day, marking the highest level since November 8, 2024. Institutions attribute this appreciation to reduced market demand for the US dollar and optimism about China's economic outlook. Recently, Chinese traders have reduced dollar demand, alleviating dollar shortages in the banking system and creating conditions for further renminbi appreciation. The State Council Information Office will hold two press conferences today to discuss first-half import-export data and financial statistics. China will release trade data today, with June exports in US dollar forecast to grow 5.1% year-on-year, previously 4.8%. Imports expected to rise 1.4%, previously down 3.4%, and a trade surplus projected at 111.45 billion US dollars, previously 103.22 billion US dollars. Guiding insurance funds for long-term investment. According to mainland media, the Ministry of Finance issued a notice to guide insurance funds towards long-term stable investments, strengthening long-cycle assessments for state-owned commercial insurers. This news boosted insurance stocks. The measures adjusted the return on net assets metric for operational efficiency from a combination of 3-year cycle plus current year to a combination of current year plus 3-year cycle plus 5-year cycle. The current year metric, return on net assets, is weighed at 30%. The 3-year cycle metric, 3-year return on net assets, at 50%, and the new 5-year cycle metric, 5-year return on net assets, at 20%. The addition of the 5-year metric with a 20% weight will encourage insurers to invest in long-term profitable sectors like energy and chips, enhancing the stability of insurance fund investments. China Building Materials and CRRC issue profit alerts. China National Building Material expects a profit of approximately 1.35 billion yuan for the 6 months ending June, compared to a loss of 2.018 billion yuan in the same period last year. This is due to higher sales prices and low costs for cement and glass fiber, reduced costs for commercial concrete, increased sales of wind turbine blades and coatings, and lower net losses from changes in the fair value of financial assets, partially offset by lower cement sales volume. China Railway Rolling Stock Corporation expects first half net profit attributable to shareholders to range between 6.722 billion yuan and 7.562 billion yuan, up 60% to 80% year-on-year. Non-recurring profit is expected to be 6.216 billion yuan to 7.056 billion yuan, up 85% to 110%, driven by increased product sales. US President Trump's threat to impose a 35% tariff on Canadian goods and higher comprehensive tariffs on most trading partners pressured US stocks. The Dow closed down 279 points or 0.6% at 44,371 points. The S&P 500 fell 20 points or 0.3% to 6,259 points, and the Nasdaq dropped 45 points or 0.2% to 20,585 points. For the week, the Dow fell 1%, while the S&P 500 and Nasdaq fell 0.3% and 0.1% respectively. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, closed down 31 points or 0.4% at 7,436 points. Tesla delivers new cars in India. Large cap tech stocks showed mixed performance. Nvidia remained strong, rising over 2% at one point and closing up 0.5% at $164.92, hitting a new high for the fourth consecutive day. Tesla and Amazon both rose 1.2%. Tesla will open its first showroom in India on Tuesday and expects to start delivering vehicles as early as late August. The first batch of vehicles shipped to India are Model Y rear-wheel drive SUVs produced at its China factory. Meta fell 1.3% and Apple dropped 0.6%. Additionally, Intel announced its spinning off its AI robotics and biometric joint venture, RealSense, and completed a $50 million funding round. RealSense, a company producing robotic automation tools and technologies, plans to use the funds to develop new product lines and meet growing demand. This week, the U.S. will release CPI and PPI, import-export prices, retail sales, industrial production, housing starts, the University of Michigan Consumer Confidence Index, and the Federal Reserve's Beige Book Economic Report. Our stock pick today is Minth Group, stock code 425. Minth Group primarily engages in the research, development, production, and sales of automotive parts and tooling molds. Its automotive parts business includes products such as metal and decorative strips, plastic components, aluminum parts, and battery casings. The tooling mold business encompasses various molds, gauges, and fixtures used in the development, processing, and production of automotive exterior and body structural components. As a global supplier, the group has established a network for R&D, design, production, and sales in countries including China, the United States, Mexico, Germany, the United Kingdom, Serbia, the Czech Republic, Thailand, Japan, South Korea, France, and Poland. The group is actively exploring new growth avenues and products, focusing on developing a second growth curve. This includes forward-looking investments in autonomous driving and future charging technologies such as electric vehicle wireless charging systems. Minth has signed a strategic cooperation framework agreement with Siemens of Germany to collaborate on wireless charging projects. Additionally, in response to market and policy trends, the group is venturing into the low-altitude economy and bionic robotics sectors, leveraging its expertise in lean manufacturing from the automotive industry to prepare for large-scale commercialization. In the low-altitude economy sector, Minth focuses on the design, R&D, and production of airframe and rotor systems for low-altitude aircraft. It has completed the design, development, and sample delivery of over 100 components for a client's first aircraft model. The group is also deepening partnerships with leading Chinese flying car (eVTOL) manufacturers, actively participating in projects and certification processes for airworthy models. In the bionic robotics sector, Minth focuses on independent R&D of integrated joint designs, motor drive technologies, intelligent electronic skins and masks for robots, wireless charging systems for robots, and limb structural components. It has established strong cooperative relationships with multiple robot clients, engaging in synchronized design and delivering small batch samples. In March this year, Minth signed a strategic cooperation agreement with Zhiyuan, an intelligent productivity company dedicated to integrating AI and robotics to advance innovation in AI and humanoid robotics. The partnership will focus on developing intelligent exterior and electronic skin technologies for embodied intelligence and humanoid robotics to enhance tactile and interactive capabilities. They will also collaborate on wireless charging technologies, joint assembly techniques, and optimized lightweight limb structures to improve humanoid robots' motion performance and endurance. Leveraging its advanced manufacturing experience in automotive parts and global network, Minth will work with Zhiyuan to advance secondary development and application of humanoid robots in automotive parts manufacturing, enhancing production efficiency and flexibility through AI-driven industrial automation upgrades for global expansion. Recommendation: buy at 23 Hong Kong dollars. Target $25. Stop loss at $22. I do not hold the aforementioned stock.